Good evening and welcome to the Australian Stock Market Show. If you've been looking forward to tonight's show, then you're not alone. We're super excited about what we're going to bring you this week. So sit back, get ready and learn as we dive into all things stock market with you. Tonight we'll cover many exciting stocks including ASX, Yowie, Gold Road Resources, Xero, Webjet, IAG and more. So hang on to your seats as we take you on a journey of understanding in the stock market. Our main topic for tonight is Afterpay, Appen and Nearmap. Fall heavily and will they recover? Big question mark there. Hello, I'm your host, Janine Cox, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators. How are you?
I'm very, very good.
That's great. I'm glad to hear it.
I didn't say super fantastic. They're probably sick of me saying that.
No, I'm not sick of you saying that.
I'm not saying about you being sick of it. I'm saying may be sick of me saying super fantastic. Hasn't it been a great week?
I don't know. It's only 2 days of the week. Why is it so great?
Every day's great, but I had a great weekend, did you?
Oh, yes.
It was a beautiful
nice.
weekend, everything
It was Mother's
else.
Day on Sunday.
Yes, well, yes, it was Mother's Day on Monday. What did you get for your second Mother's Day?
A sleep-in. That's
sleep-in.
the best Mother's Day ever.
Sleeping. You didn't get like pancakes with jam and strawberries and champagne and nothing.
I was asked did I want
a foot massage?
XYZ breakfast and I declined. Because we were going to go to lunch, so I didn't want to eat too much.
Oh, damn. Oh, well. Cool. Well, we better get moving on anyway. But if you are a first-time viewer, welcome to the show and congratulations for taking that first step to being better informed about everything stock market related. Now, with the lineup of questions tonight, I know we are set to share many valuable insights that will not only help you understand the stock market better, but ensure you profit more.
We've had way too many questions sent in this week to answer, and we do love getting your email questions and hearing about your stories. But as normal, we've had to edit quite a few down so as to focus on the important questions, the meaty part of those emails.
Some of them were quite long and great stories too, great stories, but we did have to edit some of those down. Now, as always, this is a live show and it's a two-way street. That means right now that you need to take some action and click on that subscribe button now to show your appreciation and support to the team that's bringing you tonight's show.
Moving on, it is the second Tuesday in the month, and this means that we look at the sectors in the Australian market. So let's get into the chart, shall we?
Okay, now on your screen right now is the watch list of our sectors in the Australian market. I
didn't know what you were going to say for a minute there. You're on the ball. We've only just started the show. Come on. Okay, materials.
Everything's a bit slow tonight, including me.
Okay, I'll make allowances for that.
Okay.
Materials is at the top of the leaderboard for the week so far, up only 2%. Consumer staples up around 1%. That's a good start for the week to see industrials, which is always a really good indicator of the market's direction, up 0.75%. Consumer discretionary up around 0.56%. That's interesting, isn't it?
Yeah.
To see the consumer discretionary stock still moving up. All ordinaries index, 0.09%.
Pretty flat.
Flat. Healthcare, in the negative. Financials, in the negative. Utilities, down 0.65%. Communication services, down 0.7%. Energy down 1.67% and information technology down 3%. So this is the one that we're talking about tonight that's going to be
2 days doesn't make a sheep station, so let's get into some really cool stuff. And
okay,
yep.
The monthly, 6% up for the materials sector, 1.4% for financials, and then we drop down to the all ordinaries, which is 0.56%, and then from there, consumer staples is nice and steady at 0.54%. So we can see that just there, is sort of in the middle of that leaders board, the green section of the leaders board. Coming down, the energy sector only up 0.13%, so it's pretty much line ball.
Yep.
Consumer discretionary is flat for the month, so that's interesting. Then we come down from that. We've got industrials, communication services, healthcare, down.
Okay, so what does all this mean to people?
Well, it means that we need to just keep an eye on what's happening on a month-by-month basis so that we know the direction of some of these sectors and where potentially there are opportunities and where there are areas that we should be watching closely, as a warning sign. So, for example, information technology we know has been hit quite hard, so that's an opportunity area potentially.
Yeah, because I know earlier this year we were telling, late last year and early this year we were saying materials, financials and energy.
Yes.
And were good and technology was going to be poor.
Yes.
We were saying that earlier this year.
Yep,
so what are we saying now?
So we're saying that it still could be down for the rest of this financial year.
So we're talking about information technology?
Yeah, However, in the second half of the year, we could see some opportunities there.
Okay.
That's what we're going to talk about later.
Okay.
But looking at materials being up 6%, well, look, I think it was moving up. Some of the stocks were moving up quite strongly, but the question is at the moment, will that continue?
Will that continue? I know FMG
so it could be that we
today.
see a bit of a switch in the
Okay.
following month.
Yep.
So looking at the year, just to get a bit of a bird's eye view of what's happening so far this year, financials is actually on top.
Yep.
So for the month, financials has lagged the top one, materials, and materials is taking second place here in the yearly leaders board. And then we've got consumer discretionary again,
they're
stayed
doing
in the
well
top
too.
section still. Communication services up 10%. And the index is actually up around 7, which is doing well so far. But this can change from one day to the next. So we could be looking at it in 3 days' time. If the market drops, then that's going to completely change these numbers, of course. So you've just got to look at it in that light. But again, information tech, if I just jump right through to the bottom again, information technology is down around 16%.
Okay, so we're going to talk more about that later on tonight anyway.
We are, yeah, because, years were negative turn positive eventually, don't they?
Okay.
All right, that's all from us about the sectors in the Australian stock market. Now it's time to get into our first email for the night.
Okay, and our first email tonight is from Alex, who says, "Hi Janine and Dale, I've currently just completed Module 3 in the diploma, going into Module 4, and I'm loving it so far. I'm looking at buying ASX as it has had 2 entry signals. I'd just like to get your thoughts on where this stock is headed. Hopefully I've made the email in time." Well, you didn't, Alex, mate. You made it after 3 o'clock last week, so we put you in first for this week, so that's what we're going to do.
Well, that was very kind of you.
I know. I am kind sometimes. I'm not a mean person all the time.
Yeah, well, I tried to talk you into doing that for people and it didn't work previously, so what changed your mind?
Everybody calls me a grumpy.
Yeah, so that's what you want to change, is it?
Yeah, I'm not grumpy
You don't
anymore.
want that label.
Let's get into ASX. We've got a lot of stocks to do tonight, so let's get into ASX and bring all that up. So you bring up the stock anyway. Now, ASX...
Do you like ASX?
Hey? Look, sometimes I do and sometimes I don't. It's one of those ones that I sort of like it, but then I don't get too excited about it. So, but let's have a...
Someone actually asked me the other week, would you buy ASX? It's in the top... It's the...
Well, it's one of the... It's in the
It's
top.
the index, isn't it? So, how do you then look at that situation? If you're looking at an index.
Well, the ASX is not an index itself. It's the company that provides all the trading on the stock market and everything else. So that's what it's actually doing. So it's not actually an index itself. And a lot of people think that the ASX, if the market's really bullish, the ASX will actually rise really, really strongly when it's not necessarily the case, because the ASX has lots of ways it makes money, and brokerage, as we've discussed in previous shows, is not really the major source of its income. And that's really why a lot of people wrongly think that when the market's bullish or bearish, the ASX is making a hell of a lot more money, and it's not really. So we're going to look at ASX on the screen, because I know you've had some challenge picking up our workbook.
I've got it.
And that's why you've been listening to me waffling along.
Okay, so you can see ASX on the screen there. We've got the monthly chart and the weekly chart on the right-hand side, and this is the shorter time frame, and the monthly chart on the left. Now, what's happened recently is it's just traded sideways, hasn't it? So there's really been not much gains going on there for the ASX.
But this looks nothing like the All Ordinaries Index, does it?
It doesn't.
And
it's lots of other stocks have been rising and this has been falling. So this is why, right now, where do you think it's going? It's not really going anywhere, is it?
Well, it's a student. They've brought on a couple of rules. It's moved up quite strongly pretty much after they bought it, based on the rules that they told me in the email, because I've had to edit the email down because it was reasonably big. And it's just stalled a little bit at the moment, which is not too... it's pretty normal, because stocks will rise and they'll get equilibrium for a little bit while, and then they'll rise again and into what they call disequilibrium. So they'll go up, go sideways, go up, go sideways. Or they'll go up, come down a little bit, go up, come down a little bit. That's just normal. I think this is just doing that at the moment. So I wouldn't think...
Look, from time to time this stock does trend well, but it can be really volatile at times. That's one of the things that I've found interesting about it. But mergers and acquisitions have been down, so that's having an impact on the ASX, which is where they make a lot of money, isn't it?
Cool. All right, so let's move on. That's enough for ASX.
Yeah, so we have an email from Guy.
Let me do that. I'll put
Hi Dale and Janine. A couple of months ago, before being slightly more educated and watching your show, I bought Sydney Airport for $5.19.9. Very accurate there. thinking that it should rise with consumer confidence in travel. However, Sydney seems to be trending sideways, and I'd like to know your thoughts as to whether best to sell now and reinvest into something else, more likely to fit within sensible buying rules and possible prospects. Thanks again, Guy. So really good question. And what do you think that he's really asking?
Oh, can he buy now? That's what they're always asking.
Yeah,
Isn't it? This is where they hide the terms in there, but they just go, can I buy it now? Do I have to sell it?
But he doesn't want to ask that, so he's asked it in a much more intelligent way.
Oh, look, I loved his email. I thought it was really, really good. So what are your thoughts on Sydney airports
At the moment, I think it's going nowhere.
Yeah.
It's just, wait and see with Sydney airports because there's no real direction. You look at the weekly chart, it's just been so volatile, and then it's just, it hasn't really traded on from where it was back in May 2020.
No, it hasn't, has it? It's just really been an ordinary stock. And it always is a volatile stock, and it hasn't been a real great trending
And we've
stock.
seen the same thing with TCL, Transurban, any big infrastructure type stocks like that have just gone sideways. So, look, I mean, I think there'll be a time when it will turn. We never say that a stock is no good at all, like except for Telstra, we did say that once, but for Sydney airports,
I said that for years, not once.
You'd think it would come good again at some point.
It is. So, any good news on this stock?
Look, at the moment, I would say probably, not right now, maybe in the second half.
Okay, so right now it's moving down, so it looks like we need to set to move up strongly beforehand, but right now it doesn't look that really, really good.
I think so.
Okay, so the next email question we have is from David, who says, hello, can I have your technical analysis opinion on the chart for Yowie, which is a stock ticker code YOW, please. Thank you, David. I've never looked at Yowie. And I know that some people think that's strange when we go, I've never seen that stock before, and the reason why is Janine and I only look at the top 100. We don't really get outside that much.
We're supposed to be experts on every stock.
There's 500 stocks. We're not experts on every single stock. We're experts on technical analysis.
It's funny, isn't it? Because some of the big stocks, I can just remember exactly what the chart looks like, and I can pretty much trace the outline of it on a piece of paper if you asked me. But for one of these stocks, I wouldn't have a clue.
I could print up a chart of one of the top 50 stocks and hold it 3 feet away from you. Go, that'll be that one, and you'll know it.
Well, looking at Yowie at the moment, it just looks odd, doesn't it? It's very illiquid. You can see that from the weekly chart, the way it's been tracking how illiquid this stock is. It's just gapping around all over the place, and when you see ranges of bars that are like that, then you know straight away how illiquid it is. Look at what it was like back here. So I would say, from my perspective is at the moment, I would not be I would be steering clear, because it's just, if it doesn't suit your portfolio criteria, then why would you touch it? Because you're risking money on this one that potentially you make money on a nice big stock and then you give it away on something like this.
This is one of those stocks, just looking at the chart that I'm seeing on the screen, this is one of the stocks where, people sort of buy in here and they see maybe some good fundamental news, or they buy in on one of these moves up and they think it's hit at bottom and it's starting to move up, and then they get into it and then they watch it fall away and go sideways for years on end, and they don't really make any money. And how many times have you seen that in the past? It is just so common that people do that. So again, I'm not excited about it. So I'm going to how about I handle the next question while you put all the rest of the stock codes in, because I know we've got a little bit of an issue with our workbook. Something's wrong with it. So Janine's going to create it while I answer the next question. And the next question we have is from a good-looking gentleman called Steve, who says, evening, Dale and Janine. I'd like to run a scenario past you. For example, a stock is bought for $10 and I want to sell it once it reaches $11. A stop loss is also set at $9 to cover any sudden movements should the trade decide to head south. Now, what would happen should that stock reach the $11 mark, triggering the sell, but then suddenly drop $2, crossing the $9 stop and triggering that action as well due to a sudden fall in the market? Now, I gather a fine is issued as I've seen the warnings, but can this be avoided besides removing the second trade manually, or is there another condition that can be used to avert this possibility from developing? Kind regards, Steve. Interesting question, Steve, and I don't think what you're talking about, I don't think that's possible to happen. And the reason why is because when you're trading online with the broker, they have your share holding, and if you've got an order in that says if it rises to this exit, and if it goes down to that exit, you can't exit the same stock twice. The broker won't let you sell something you don't own. So in their system, they'll automatically trigger the sell, as you said, at $11. So if it drops after that $2, you've already out of that trade, so they're not going to trade it again by selling that stock again for you at $9. So I don't think they're going to do that. I think that would be really strange if that actually happened. But again, it's also about a process too. I don't think the strategy is correct either, because if you're buying stocks that can do that in the same day, not only rise through your price that you want to sell at, but then flip around and do exactly the opposite and fall theoretically 30% in price, or roughly 30% in price, at least 20% in price, then you've probably got the wrong strategy. So to me, never ever set stops going up. There's always a rule around, or a technical rule around, why you buy and why you sell. And too many people go, if the stock moves up 10%, I'll just sell out. And that's the reason why they do that, is because they don't have rules around, or proper rules around, letting the trade run. And they're afraid of losing some of the profit that they've made. And to me, that nobody ever rings me with a stock going up in price because they're making money. And it's about having proper rules of exiting a stock and trailing the profit up, because you've got far less risk holding onto a stock that's moving up in value than you have by getting into a new one that you don't know is going up in value. So you really do need to be really careful with that and the strategy you've got. But I don't think the situation you've mentioned will actually occur, or can occur, with the broker based on my knowledge. Now, thank you for the question. Now, our next email is from Juan, who says, "Hi, Dale and crew. My exposure to trading came a lot of Australian 2007 crypto bubble." I think he just came out of the 2017 crypto bubble. "I've done well during bear markets and bull markets. I've made enough to pay off my mortgage." Well done, fantastic, mate. He says, "I'm now moving to shares to have a different market to play with. I never did fundamental, I just traded the chart. What advice would you tell somebody coming across? What sector would you advise me to start with? Thanks in advance, Juan." To me, trading is very much like driving a car, Juan. It's the same thing. It doesn't matter whether it's Bitcoin, FX, CFD, stocks, whatever it is. You know, it's how you trade is the same. The same rules, the same tools, the same everything. And it's like driving a car, as I mentioned. I know that I can give you, we can drop you anywhere in the world and give you some car keys of any car in the world, and I know that if you are somebody who can drive a car now, that you'll be able to drive that car, because all cars have 4 wheels, a steering wheel, you know, an ignition, a brake, an accelerator, etc., etc. And you'll be able to do that. It's the same with trading. It doesn't matter whether, if you gave me a chart of Bitcoin without the name Bitcoin on top of it, or any of the cryptocurrencies without the name of the cryptocurrencies on it, and you gave me charts of a stock without the names on it, the charts would have all the same sort of data and information on it to do all the analysis that I need to trade them without knowing who it is. I don't need to know the fundamental side of any of those to be able to apply technical analysis to them. And that's what I mean by, if you understand how to trade crypto markets, like Bitcoin, for example, and your technical analysis techniques are good, then there's no reason why you can't trade stocks. It's not about picking a sector. And I would suggest, if you're new to the stock market, trade the top 100 stocks, that's it. Look at the top 100 stocks, apply your technical analysis to that, and determine your rules. The only thing that changes in the stock market, or stocks, or in any market, whether you're going from options to FX to stocks or to Bitcoin, will be your money management and your risk. And so your money management is position sizing, and the second thing would be stop losses. So you'll be using slightly adjusted stop losses. For example, you may not have such a sensitive stop loss for stocks as you might for something else like FX or options, or even a Bitcoin. You might have a much more forgiving stop loss for stocks, and not all stocks too. If you've got more lower cap stocks or more volatile stocks, you have a tighter stop loss and all that. But I think, did you want to add anything to that, Janine, at all?
No, I think you've handled that extremely well. Can I say that diplomatically?
Thank you. Thank you. Okay. But I'll let you take it on now.
We've got a question from Thomas, and a great one. "Hi, Janine and Dale. What are your thoughts on Gold Road Resources?" So the code is GOR. "I feel the market might have underreacted to the company performance, as its gross profit was up by 290%, while the share price has tumbled a lot in the past 6 months, and the gold price is starting a reversal trend with double bottom. Do you think it is perfect time to buy the stock at this price? Thank you so much. Cheers. Kind regards, Thomas." So we've got GOR here. Looking at this one on the screen, you can see the monthly chart is showing how it's experienced a significant decline. Right, and we're looking at the pullback over a number of months. So this is what's happened on gold, basically. So we've seen lots of gold stocks pull back in a very similar fashion. It's almost like they're mirroring each other in terms of the recent decline.
I'm going to ask you a question. Is they talked about, obviously, profits up, but the stock price is going down. And a lot of people think, why is that happening? But I'm going to ask you a question, is it common?
It is.
Yeah. And that's the point. And a lot of, I want to use the word retail traders, not necessarily inexperienced traders, because if people see record profits, blah, 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 they think, now's the time to buy. But what they don't understand is the big end of town have already bought and they're selling out into that.
Well, we were hearing all these people talking about buying into the tech stocks, buying into banks, right before we were expecting at least short-term peaks on the stocks in that area when they've already run. Because they've heard all this good news coming out, but the good news usually comes out way after the prices have already been running as a start.
Correct.
And what you might see is a bit of a change of guard. So once, gold's been falling, it bottomed. I expected it to get to around 1,700 points.
Yep.
It fell just back below that and started to move back up. And the gold stocks are more or less mirroring that. So it's almost like a sector-driven move we're seeing at the moment in line with that gold move, but it doesn't always work that way.
Now I know on our Talking Wealth show with Flix, that's for those of you not seen it, it's flixx.net. I know you interviewed Joshua Rothbard a few times, who's a gold expert. So, and I think the last time you interviewed him was about 6 weeks ago.
No, it was more than that.
A little bit more than that. So he was giving you his outlook for gold and silver and things like that. So where is your outlook for gold over the next sort of 6 to 12 months then?
Well, look, I mean, in terms of the long term, I think gold will keep going up. It's like the stock market. When people think, gold's going up when the stock market's falling down. It's not necessarily so. We've shown people that on the show in previous episodes how that doesn't always work. So I guess over time, gold is going to become more scarce because they can only dig so much out of the ground. There's a finite amount of resource there. So, and they talk about gold being recycled and what have you, but I think there's a limit to that. And I think over time, as more people become investment savvy, which is we're seeing happening, and more people accumulate gold, I think that's going to become more scarce. So longer term, I'm expecting the gold price to move higher.
Okay, higher. But to people, with gold's a little bit different than things like lithium, isn't it? Because people buy gold, and a lot of the gold, I would suggest, is stored in vaults. It's not actually, we're not wearing it as jewellery, but what other things is gold used for?
Well, look, I mean, gold is used in all sorts of different areas of production because, I mean, gold is inert. It's a really good metal to use, but of course it's quite expensive. So therefore that can limit where it's actually utilised. So, but I think that, the fact that people will continue to use it just in jewellery and giving it as gifts and using it as an investment, as a safe haven, as a defensive asset, that actually makes it really valuable.
Okay, so right now this stock, you're saying it looks okay short term? Or
short term it looks okay, but I wouldn't be looking at this stock long term, even though the gold price is going up, because it's with some of these mining stocks, you really have to pay attention to what's happening with the company, the smaller mining stocks, and then align that with what's happening to the gold price.
Fantastic. So there's your answer.
All right, fantastic. It's time to get into tonight's topic. Afterpay and Appen and Nearmap fall heavily. Will they recover? ASX technology stocks Afterpay, Appen and Nearmap fell around 20% last week, and Appen's down 73% or thereabouts since August last year. Nearmap down around 40 or over 40% in the same time, and Afterpay's down over 40% from its high in February this year. Several other tech stocks have fallen just as much and more. So should you be fearful right now or excited by the fall in these and other technology stocks? And is now the best time to buy technology stocks?
This is a good question, isn't it? Now, what we've observed over decades is how typically investors become increasingly fearful as stocks they own fall heavily. Now, they're fearful of losing money, and this shows a lack of rules and structure in their trading. Now, on the flip side though, those not in those stocks may be getting excited and prepared to take the advantage of the huge opportunities to profit. But the question remains, when is the right time to enter a stock that has fallen hard so that you don't catch a falling knife? And we've seen that's the case with some stocks.
Yeah, and we need to remember that fear comes from a lack of knowledge, and that education is actually the enemy of fear. Investors without knowledge are fearful when stocks fall away in price, and the more stocks fall, the more fear they have, and often they end up writing stocks down to their lows, hoping for a recovery. But It doesn't have to be that way, and that's the important message that we've got
I think that's the buy and pray method, isn't it? Now others watch stocks that have been falling heavily and jump in early thinking this stock is cheap. Now, I'm sure you guys don't do that, yeah? And they do so with the intent of getting in early to gain maximum profit, but it doesn't always work out as they might expect.
So what would you rather do? I'm sure that you would rather be out of stocks while they're falling and then exiting. Well, the exciting news is that you can be, and with the right knowledge, you could take advantage of huge opportunities to profit on stocks that have fallen heavily. When you really stop and think about it, it just makes sense to sell off stocks that you own that are falling and put your money into stocks that are rising.
That's pretty much a no-brainer to me, if you ask me. But
I know,
anyway.
but people, it's natural to think that stocks are going to recover and then start moving back up, isn't it? Because if people looked at what's happened with the correction with COVID, people are now lulled into a false sense of security that same thing's going to happen again.
Same thing's going to happen again, and people fear they don't want to realise a loss, so they don't like taking a loss.
That's right.
But you need to be able to do that. Now, to assist you tonight to be on the right side of the trade, we'll share with you how you can not only be better prepared for when a stock you own falls, but more importantly, how you can be ready to buy when the opportunity to maximise your profits presents. So we will take a look at a few opportunities in the Australian technology stocks and discuss whether now is the right time to buy into this sector.
Now, if you think back, you'll remember that we have been preparing you for this. Recall the start of the year and our analysis indicated that tech stocks would become overbought and would turn swiftly. Now, Dale, you warned investors about this and in your reports and buying into the sector at the peak, remember, and encouraged investors and traders to be patient. And over recent months, this will have paid off for those who really listened to that and followed that advice. So before we get into the stocks, would you share why this phenomenon occurs in the market over and over again?
Well, because I planned it. I paid money to make sure it happened. That was like I just rubbed my... No, but...
Why did I put that question in there?
Why did you put that question in there? It's a really simple concept, and I know I copped a lot of flack from people going, technology stocks are going to keep booming, and
Yes.
I got a lot of emails and a lot of comments from people saying, you don't know what you're talking about, Dale. And that happens all the time, and it doesn't matter. I've said Bitcoin will crash in the next 1 to 2 years, and it will. There's no doubt in my mind it's going to do that, but I'm going to get people saying to me, you don't know Bitcoin.
But they don't know cycles.
They don't understand what we know, and they're looking at it from a very microcosmic type of view. And we've been doing this. I've been doing this for nearly 30 years. And I just see it time and time and time again. It doesn't matter whether it's Bitcoin or whether it's...
So what you're saying is be patient.
Be patient. And the reason why is because stocks go from a point of a low price to a super high price. And the more they go up, the more people who didn't get in earlier want to get in, and they've got the fear of missing out. Then the FOMO keeps getting bigger and bigger and bigger until all the people with FOMO run out of money. And that creates the bubble. When they run out of money, then people in the know are starting to sell because they're seeing that. And you see them slowly start to dip over, and then they start going the other way. And then the opposite happens. Those people with FOMO who got in late or at the top end, and statistics show us that the most volume happens at the top end of these stocks or these bubbles. And so the people in the know, like Janine and I, know that, and we start selling into that and getting out of that. And then those people that bought in late don't sell, and then they starts keeping going down and down and down and down. And eventually they start panic on how much they're losing, and then they just dump, and then we get this exhaustion phase, and then the cycle repeats. Rinse, repeat, do it again. Simple as that. Well, was that a good enough explanation?
That was fantastic.
Okay, can I get a star, a gold star?
You can if you continue with the next step. Okay,
so anyway, cool. Well, let's get into the charts right now and have a look.
Okay, on the screen there we've got information technology.
That's the sector.
This is the sector and the list of stocks within the sector. Okay, so now I've ordered them according to market cap. So you can see, of course, Afterpay is at the top. We've got Xero, Computer Share, Next DC, Car, which is car sales, ALU, VEA, Appen. There's a whole list of stocks there, obviously, that are the biggest stocks. And we can see what's happening here. This is a daily move, right, so far. So today everything was down, but APT fell 8.7%.
Correct.
So this is a big sell-off that's going on at the moment. And as we've always said, the panic happens at the bottom. Let's have a look at the month and see what's gone on. So we're seeing for the month, APT's down 24%.
Yep.
That's a huge move, particularly as it was already so far from the top anyway. And we're seeing a few other stocks follow suit. Now, not all of them are going to fall at the same rate at exactly the same time and make lows at the same time. We're seeing a few in green still. There's a few smaller ones there in green.
Not much. So let's order it by the month. So this is the month. This is from 1 May.
Yes, so this is for the month of May. So now you're looking at what's going on there according to that changes.
APX is down 28% for the month. APT, Afterpay, is down 24% for the month, and Nearmap is down 20% for the month. Let's just go to the year now and have a quick look at that.
Now, this could be, I'm not sure, this could be a year from going back from today.
It's calendar year.
It's calendar year?
It's only calendar,
okay.
So 1 January. So we're still seeing here APX is down 55% through there. And if we just scroll down, you'll start seeing some other stocks you'll know. There's ALU down 28%, APT down 25%, and in Nearmap's down 24% since 1 January. Now, some of these stocks have been down longer than that since 1 January anyway. But that's just showing you the fall. And if we go to the other end, let's say if I click on here, you can see there's not a lot of big growth here, is there, in anything?
Well, they're not big stocks.
They're not big stocks, those ones that are grown in. So most of the big stocks in this technology sector are all falling.
Yeah.
That's what we're seeing.
And you'd expect that if it's a tech sell-off for it to happen at the big end first.
Okay, so let's move on. What do we got next?
All right, so now we've got to have a look at...
We've got a lot to cover tonight, haven't we?
We do. We've got to have a look at the sector itself and just first of all get an overview for what's going on. Now, of course, this is going to be dominated by the bigger stocks because it's weighted.
Yep.
So we can see the direction is obviously down. That's really all we're looking for to see what's happening with direction.
So these are mainly the wax stocks, aren't they?
So this is the big stocks having an influence on those sectors, not necessarily all of the wax stocks because you've got a couple that are smaller in there.
Yep.
So of course APT is going to have a big influence, and it looks like the chart of APT.
Well, APT is in the wax stocks.
Well, that one is, yeah, but WiseTech, it was small, it's not going to have much of an influence. So APT, there it is there, you can see it's fallen through that low. So that's what we were looking at when we checked out this stock recently. We were talking about that low, and it has taken it out.
But how many times are people saying, can I buy, can I buy, can I buy?
Well, it's falling.
Well, it's falling.
Catching a falling knife.
That's APT. And we've had that over the last few months of people
Anything
saying,
could happen right now while it's in a sell-off, really. So we're looking at APX just to see what's happening there, and that's had a massive fall. Look, all of these stocks, we talked about them falling 20%. Just have a look at this one. This is not really, actually I'll just grab that tool, there we go. It's not really much in the scheme of things when you consider how far it's been falling. Like you said, from August, it was around down 70%.
Yeah, I'll just show people about how far it's down since that high way back there in August 2000. You have a look at that. So that's to the close at 74%. And I can guarantee people have held it all the way down who'd made money through here buying in through after the COVID low, jumping and making some money, and then they've held it thinking, okay, if it gets back up to that high, then I'll sell it, and it goes down, and then it comes down, it goes below their buy price, and they're going to go, oh, I'll get into it, I'll get out of it when it gets back to my buy price, and it's down here, and now they're wondering whether they should hold it or not.
Well, often stocks that fall like that, they once they get to about 70%, they can end up going to 90 or even go through their all-time low.
So what Janine's talking about here is if I put this tool onto that high there, you can see here it's down 70% on that all-time high
75.
price. So if you look at that all-time high price at $43.66, if you divide it in half, you'll get 21, and if you go to 75% of it, then you're down to $10.91. So if it falls through that, it'll go to $4.36.
Yeah.
That's really what you're saying right there.
Close to that at least, yeah. Yeah, so this could be an opportunity down the track, but it becomes high risk.
It becomes high risk.
Because what's happening as the stock falls down, eventually it might get put into a different position in the overall market in terms of the indices.
It might drop out of an indice.
Yeah, it might drop out of an indice, and therefore people are not excited about it anymore, and the fund managers who look at it will be different. So, it's going to take a lot to turn this around given how long the trend is down. So, if I go back to APT for a minute, the trend's only been down for a short time by comparison. So it's still got potential to find support at some point in this decline over the next couple of months and then turn around.
So currently this is sitting at $89. If this falls through $80, then it's probably going to go to 60. That'd be my guess.
It could, yeah. But you and I both know that once you do the analysis and you learn how this works, you're not necessarily going to draw the line in the sand at exactly $80.
No.
The level could end up being $75 or $76. That's the important level that you determine from your analysis. But you're saying around that $80 mark,
Look, and it would be around that. I know some people ask us, can you give us your price target for this stock, where you think it's going to go? And I go, well, it's not really relevant to you, because if I set that right now, I might change that in 2 weeks' time, based on what we're seeing and based on some other analysis. But right now, if that goes through $80...
This is a stock, because it's the biggest in the sector, it could still be a really good opportunity.
If it finds support at $80, then my whole position changes.
Yeah.
It really does. It will actually change to being one of probably me being more bullish.
Look, I think that opportunity is going to occur in the second half of the year, given what we're seeing now. But, we have to keep watching it all the time now.
But right now, it's falling away, so you shouldn't own it.
Yeah, so that one's probably higher risk, Appen. Nearmap, what do you think about that? Because you really liked this stock at one stage.
Yeah, I did. I liked it a few years ago. I haven't really liked it for the last sort of year or two. I just think it's just messy. And that's probably the only way I can say it's not really trending well. And when something's not really trending well, that implies things are going on in the company, because there's uncertainty around it.
Now, if this stock continues to fall, could it take out that low that was in 2020, the COVID low?
It could. It absolutely could. And you'd hope it didn't fall below that sort of low back here. You'd hope it'd find support above all of that. But right now, it's looking decidedly bearish. So it might come down to that level and find some support. But right now, I just don't like this stock at all. Yeah,
so if you were in it and it traded out of these lows here, then you would have been selling it, wouldn't you? Because it just
there's so many sell signals on that prior to that point in the first place. And that's really what we say to people is they don't take these sell triggers, and they live in hope of it going back up again. And so they've done that with Afterpay, and at the moment Afterpay is getting close to that level where I think if it goes through that $80 level, it's going to lose another 30% roughly. So do you want to be around on that if it does happen? So if you're not in it, the exciting thing is you can sit there and wait. And then when it does find support and says it's starting to go up, you can jump in at a really good price.
The problem is when the market's been running hot and people have been buying lots of stocks, they get used to buying. It's the excitement of that buying. And if people who get caught in that and they haven't developed the discipline around trading and just waiting and then waiting for the stocks that you are studying to trigger, they will look for stocks and try to get in on stocks like this that are falling and higher risk.
Okay, so I think we've got to go to another. We're running out of time, I think.
Okay, have we got time for another one?
I think we've got a couple of minutes.
Okay, so we've got Xero, which is probably looks better than all of the rest at the moment.
This is my pick of the bunch, I think.
So
this is my pick of the bunch.
At the moment it's pulling back. It could still follow the rest eventually and take out that low. There's a possibility, but we just need to see how far it pulls back as part of the current move down, and this could be a nice opportunity. So what else have we got here? We've got WiseTech, which was one that you were wanting us to have a look at. So that's a smaller one that's less likely to have an impact on the index. But, if this stock takes out this low, then it could end up down here.
Yeah.
So it could end up down near that August 2020 low, which is around, $19. So let's hope, for the sake of the stock, it's
I was
a good
waiting
stock.
for it to get through that sort of $35 area before I bought in it myself.
Yeah, I know.
Because I was liking it.
But if it goes below this low here, then, it's a question mark. But another one that you wanted to talk about tonight, you asked me to put this one on the list, was Altium. Now, that looks super bearish.
It does.
And we'd been talking about this some time ago. I think somebody wrote in about it. It just looks really bearish, that whole pattern at the top. Now, we talk about these patterns all the time. People who are trained to see these patterns will see that that's a real risk for the stock if they were looking at it, whereas the untrained eye thinks the price is down, it's down at $26, this should be a buy.
Oh, it's cheap, I'll get into it, yeah. Okay, so to wrap it up, we said to people, how can they avoid getting stuck in these things?
Look, the issue is to stay out of stocks that are falling, for one. That's the first thing.
Number one rule.
Have rules is the most important thing. Yep. Don't try to be buying in before the stock has bottomed out. Wait for the stock to bottom and then to present some really solid rules.
Never buy because you think it's cheap?
No, and never buy because brokers start telling you it's cheap. That's a really important thing. And are there opportunities, and should you be, buying now? The answer is don't. I wouldn't be buying now. Are there opportunities? Yes, we think there's some huge opportunities in this space, particularly in the second half when things settle down.
Yeah, so it's a bit early to buy these tech stocks right now. So please don't try and get into buying cheap or because you could be catching falling knives, but also don't suffer FOMO. You know, let them settle, let them get in. And the second half here, I think there's going to be some, probably out of those we've looked at, I reckon there's probably going to be at least 3 buys in there. I think we're going to get about 3 buys in there, and they'll be really good ones when they do take off, if you're patient. So, but, and again, just have a read of my book and look at how to get your entries and exits from my book if you haven't read my book, and you'll be able to get those on some of these stocks as well. But I think now's the time we get back into some more emails. Janine, what do you reckon?
Why don't we indeed? All right, we've got our favourite Warnsey. He's back again.
He's your favourite, eh?
We've got an email from Warnsey. Hi everyone, I have a question in relation to short-term trading and leverage. First of all, I have no intentions of getting into short-term trading anytime soon. However, it's a goal for the future one day where I'd like to devote a small portion of my capital to complement my long-term portfolio. My question is, what is the better option? Leverage products such as Forex, CFDs and options, or margin loans? As always, thanks for answering my questions and regards to all the team. Warnsey.
Well, I'll
That's a
take
good
one
question.
straight off already. Margin loan's not for short-term trading.
No, but he was saying he's not willing to get into it now. But I think he's thinking that if he's going to get into leverage, if he's going to use borrowed funds.
Leverage and short-term trade are 2 separate things.
That's right, yeah.
So I'm just talking about, and margin lending is brilliant. You know, when I first started out in trading and doing all my tradings, that was what I was using margin lending to increase my exposure to the market. But if you're trading short-term, it's about, do you want to trade short-term with leverage or without leverage? So you can trade short-term just by buying and selling stock.
Yeah, I mean, you can. That's exactly right. And people think that they have to use products to actually, take advantage of that short-term trading strategy and generate an income. Whereas what Dale's saying is you don't. It's just the strategy that gives you the short-term trading.
Yeah.
But the CFDs and things like that actually adds another layer of complexity on top of what you're doing, because then you need to understand all about those products and how they work, on top of actually understanding how to analyse stocks to be able to trade short term. So there's actually a progression or a process. So it's first understanding how to analyse shares and trade the slower moving markets, which I think he's got the handle on, because he's actually got a medium to longer term, I think, portfolio, which
and
is
I
the
think
way to
that's
start.
Smart, the way he wants to break it up.
Yeah.
That was really, really smart.
Yeah, because I find that a lot of people think they start out and they think, oh, I want to trade short term and make a quick buck, and they put all their focus into that when they should be putting their focus into into the medium to long
I think
term.
they want a quick buck and then they say, oh, buck.
Yeah.
Something like that.
And also talk to us about progressing from that, that process of doing the medium to long term to changing to short term and what you actually need. So, some of the guys, if you ring the office, they actually have done it themselves. So that would help them as well, wouldn't it?
To me, the answer is really simple, Warnsey. It's about where you put your decimal place. So until you can prove you can trade short term on stocks with cash, then you can't move the decimal place. And all that CFDs do or FX do or anything else is to be able to move the decimal place. So for example, if you can trade a stock, let's say BHP, and you trade in that and you can make 10% every single time you trade it, then you can use CFDs to leverage 10 to 1 and move your decimal point one place to the right, and you make 10 times more money doing exactly the same thing. But all too many people, as Janine said, get into these sorts of markets without the right knowledge and education and experience and end up multiplying their losses.
And you have to have a plan for when you transition from that medium to long term, because you want to stay focused still on your medium to long term and make sure that your eye's on the ball, because there's always opportunities there, and then put some focus on the short-term trading, but not all of it. And
Listen to Janine.
That's what people do.
Listen to Janine Warnsey.
I know, I've done it.
She's in your corner. Next, we've got a question from Ryan, who says, hi, Janine and Dale. Thanks for the great show. That's our pleasure, mate. I'm learning anytime watching your live show. Lots of knowledge and entertainment. I bought the A2 milk at $7.80 and sold it when I watched your show about catching falling knives. Thanks for saving my investment. That's our pleasure, mate. I read your book on how to beat the managed funds by 20% along my short course modules. It looks like he's in their short course as well. I would appreciate if you can give me your thoughts on Hum Group's. Warm regards, Ryan. Hum.
Okay, I wonder what he thinks we're going to say about it.
No.
No. No, at the moment, I mean, the risk with it is it's taken out this low here.
I don't know why he bought it.
It doesn't mean that it will keep falling. It could, but it's just a nice gradual fall, isn't it? Like when you look at this, let me just grab a line. I'll grab a trend line. So the fall is actually in a nice steady trend. It's not like a drop like we saw on the tech stocks. So it's not a huge sell-off suddenly.
Yeah.
there is. So that tells me that there is a chance that it could recover, but it would need to do it pretty quick.
Yeah.
In the next few weeks, really, it would need to show that. But if it closes really strongly below this low, like a big sell-off, then that would be the sign that the risk is it could take out the low and continue the long-term trend.
You know, I think he probably already knows what we're going to say. He's probably just testing us.
Why do you say that?
Well, if he's in our short course and he's in module 3, did he say module 3?
Yeah, I think so.
Yeah, then there's a lot of rules in that that tell him what he needs to be doing.
Right.
So, and that's okay.
But it depends how far he is through module 3.
Well, that's true. Read the rest of the module quickly. Something like that. But right now there are plenty of rules that I've seen over the last probably 12 months and reason not to be in that stock.
Okay.
So
next is an email from David. Hi David, Dale and Janine. Team, I read Accelerate Your Wealth, or have read it and found the book an excellent read and highly recommend it. I was hoping that you could share your thoughts on Xero. I bought at $133.60 on the 6th of April and it has crossed a downward trend line and finished 2 strong weeks above it. It had a good run of 10% after purchasing, but since then has pulled back to around my entry price. I have a stop loss set at around 15%. Kind regards, David. Well, he's got a stop loss, which is great, isn't it?
He's got a stop loss on it,
Yeah, so look, I mean, I think that he's okay at the moment.
Yeah, I don't
see any issue with it at the moment.
Yeah, I don't see any issue with it at the moment. I think people sometimes do that. They get a rule and they get them in and then it goes up for a week and then starts to fall away a bit and then they start to go, oh, did I get it wrong?
But that's natural.
That's just natural. So I wouldn't worry about it at the moment. As I said, as Janine and I said a little bit earlier in the main topic, is Xero is probably our preferred stock at this point in time, although it has been down the last couple of weeks. The tech sector has been down in the last couple of weeks, but as opposed to the other stocks, as Janine said, it hasn't fallen out of bed yet. So just be patient, stick with your stop loss. It's there to protect your capital, but you know, if you've done your analysis correct, the probability is on your side to get a profit from the stock. Anything else you want to say?
No, I think we should move on to the next email now.
Cool, all right.
I left you this one.
You left me this one. What, is a long one or a tough one?
Oh, you'll see.
Oh, thanks.
It's got to be a surprise.
You always dump me in it, don't you?
Yeah, I do.
Okay. I'm not having a go at the person who's got the email. Anyway, our next viewer question tonight is from Palermo. That's a nice name, isn't it? Palermo. Hiya, I'm hoping to trade in the markets. I'm competent in one of them being travel industry. I'm confident in one of them being in the travel industry. Last week, the stocks I have interested in, Webjet and Hello World, dropped in price. And I was very close in purchasing, but thought wow, it's a good one, isn't it? Kept me watching, and they have a one-day upside this week. I guess my question is based on the current trend. Are these stocks a buy and hold? I'm looking to be a mid to long-term investor in these stocks as travel is on a slow return. Thanks, Palermo. Probably my answer is, I understand you're probably a bit more of an expert in travel, which I got from that, so in the travel industry, but don't limit yourself to that because travel stocks tend to be a lot more fickle too. So a lot more volatile, especially, you know, airlines and those sorts of things. So I wouldn't limit myself to that. But we're going to cover Webjet today.
Yeah, now this can be a really good trading stock.
Yep.
Right, for short-term trading.
Okay.
However, it can be really volatile as well, and has been. It's sort of changed its personality a bit at some stage around here, and I can't recall now. I was following it at the time when it was going sideways. You can see on the chart there on the left, on the monthly chart, since September 2016. I followed it through here and thought it was a bit risky, and so at that point when it started to rise, I thought, okay, I've made the wrong call. I got it wrong. It's gone up, but then it started to fulfil everything that I was thinking it would do. It was just more volatile than I expected. So it actually started coming back in January, end of 2018-19. But then look, it took off again. So they were the market was really playing with this stock.
Yeah.
And then they ended up short. It looks like they've just shorted it, and it's just plunged back down again into October 2019. So you don't trade a stock like this unless you're expecting for a bit of a wild ride, in my opinion.
So is this a longer term or medium term or longer term buy and hold type thing?
At the moment, I think it's a short-term proposition,
not a
but it's not a buy now, because if you look on the weekly chart, it's still trading down. We haven't seen any confirmation of a move yet, and it's taken out this low. So we need to see a bit of consolidation in the share price. It may even come back to around this $4 mark.
Yep.
And it would need to get above at least 580 or somewhere around there for me to start being interested.
I'm with you. And I know a lot of guys that we train, they're in the mining industry and they'll play with mining stocks because they understand that industry and they hear things on the grapevine and everything else, and so they'll play with some of the mining stocks. And if you're in the travel industry, it can work for you. I'm not saying it won't, but I think there's far better buys out there. What do you, I think there's so many stocks that are much better buys right now.
Well, it's also better from a risk point of view.
Yep.
So you've really got to consider whether the risk of that particular share suits the stocks that you intend to trade looking at the chart. That's really important. And a lot of people, they just think, okay, someone's talked about this share, it's been down for a long time, maybe this is a time to buy, but you've got to have a strategy around it.
Yeah, same with Sydney Airport, some of the other ones we've seen, with the whole travel industry at the moment.
Yep.
And it will be a slow burn, the travel industry getting back again.
Yeah, exactly. Now we've got a question from Joe. Oh, Joe, you're back again. Fantastic.
She loves you.
Hi, Dale and
Guarantee
Janine.
she loves you.
Can you please share your thoughts on the insurance sector at the moment, please?
No.
IAG and QBE both appear to be in uptrends, but I'm wondering if I've missed the opportunity to take a position. I'm not really a trader, but more into buying and holding for the longer term, so I'm not sure that my style of investing would be suited to the volatility of these types of stocks. Thanks, Joe. So IAG is one of the insurance stocks.
Oh, is that the one we're on, is it?
Yeah.
Oh, okay.
Now, I've already got it set up.
Oh.
You didn't see me do that, did you?
I didn't.
It was magic.
You were so tricky, I tell you.
I just pointed my finger and it happened.
Jeez, I better watch my wallet. Jeez.
Okay.
IAG.
Yeah, so insurance sector as a whole, I think that there's a real time and a place for the insurance sector. Though it's been beaten down significantly. So QBE and IAG have all been beaten down. And I believe that there is a time for these shares, and it could be in the second half. I don't think the opportunity is missed on QBE.
No, QBE is looking so much better.
But you have to be very careful with QBE. That's something that I wouldn't even touch it without having back tested it and analysed it fully because of the history of it. And news can really affect it a lot because, with the insurance stocks, it's all about the cover that they've got. And we recently heard Suncorp, for example, came out and said that they were right down to the bare bone on their cover, and then they sold off part of the business to bring that back up again. So, but I think that we need to watch this sector. I find it's very hard for me at times to convince the investment team about insurance stocks because of the volatility of them at times. But it's like Telstra. There'll be stocks that will go down, and eventually they're going to be opportunities again.
Yeah, and look, I do agree with it, and I think IAG and QB are looking better now than what they have in a number of years, and I do think there's going to be their time in the sun, but right now. But I think they're not for the faint-hearted too.
Yeah, I agree.
I think you need to have a more of a process rather than just a buy and
You
hold.
need to make sure you're prepared to take a stop loss on them.
There are so many stocks that are better, that will trend better, that if you're an investor, they'll work better for you.
However, you could have a small exposure, like one position in your portfolio could be into the insurance sector.
Cool. And it just expected to be volatile. Yep.
But what we're saying is for IAG, it's got some hurdles to get over.
Okay, so there you go. There's your answer, Joe. The next question we have is from Sterling and Amy. Oh, a couple. That's really cool. I like that. They say, hi, Dale and Janine. My boyfriend and I'm assuming this is the girlfriend writing this to us. My boyfriend and I both use CommSec for trading. They have a summary tab which lists the prices, orders and course of sales specific to the company we're viewing. We were wondering, do you pay attention to these buyers and sellers for the day? There seems to be more volume at whole dollar amounts. Is this just human nature? And could this be used as a buy-in precursor to determine big movements at specific amounts? Thanks very much for your insights, Sterling and Amy. Good question by Amy, isn't it?
Good question.
I'm assuming it's Amy because she wrote it.
Yeah, good question, but I wouldn't even look at it unless I was trying to sell a stock.
It's a waste of your time. Complete waste of your time. Looking at the depth of the market is probably it's fictional.
It's only like if they're trading a really low liquidity, higher risk stock. Looking at the depth can actually help because it helps you understand, how you're going to be able to get that trade to happen.
Most people like the whole dollar amounts. It's a human thing. So that's why there is there. But
they might ring up their broker and say, "Can you put the trade in for $5?" But the broker might even say, "Look, if you put it in for $4.99, you're more likely to get filled or something." That's what could happen as well.
I wouldn't worry about that, Amy, because it really is fictional. There's a lot of manipulation within all of that. Like if Janine and I are trading for our clients and we're trading $2, $3, $4, $5 billion, you'll never see the whole trade. You'll see little bits of it all the time, and that's most most of the big traders, or all the big traders, don't show you all the trades that are happening. Most of the trades you'll see are just retail trades with a bit of industry trades or institutional trading around it. So
yeah, I
don't
might look
plain
at the
notice
depth,
it.
for example, you know, as I was saying before, with someone rings up and talks to the broker, and if I was going to put the sell in for the clients, and there's this, you know, a big amount of shares at a certain price, if I go under 1 cent, I'm more likely to
You're
be
gonna
filled.
get
I'm going to
filled.
do that. So yeah.
Cool. That's it for
Okay.
Amy.
All right, fantastic. Now we have a question from Nick. Hello, Dale and Janine. My question this week is for Crown, CWN. Big news with the acquisition of Blackstone and maybe a Star merger in recent months, and what looks to be the start of a breakout since late March on an upwards trend, particularly on the weekly. Would greatly appreciate your views on this stock mid to long term. Please don't ever change. You folks, you're the best. Nick, oh, thank you very
No, I
much.
think he's talking about you.
Oh, that's nice, isn't it?
He must be talking about
I
Crown.
think-
It's
yeah.
gone phenomenal, hasn't
We're
it?
a team. It's not Janine and it's not Dale. It's
Oh, good.
team. Yep.
We should. Do we have to get a name like Brad Jelena or something? We call it Dale and Janina.
Where has your mind gone?
Crown. Let's get back onto the Crown.
Don't ever call me Janina again. All right, Crown Resorts, looking at that, it's done incredibly well, obviously, with the news that's come out. But, you know, it's going to be very volatile, and it's a real question mark. You know, if
I think there's a lot of question marks around Crown, doesn't it?
yeah, I mean, would you know, how would you view this stock right now?
Well, I mean, it's speculation that Star City will want to buy in as well. So that's, you can't buy in speculation. Right now, it's really taken off like a rocket pretty quick on speculation. So I think it's missed the boat first
Yeah.
up. So I think I would rather the dust settle and get in later on if it's still good stock. But I mean, even Crown prior to all of the kerfuffle wasn't doing that well anyway.
Yeah,
So,
that's right. And
you
look,
know.
the news could change. You don't know. Something
we
could
don't know.
happen. So look, you know, do we want to talk about Crown a little bit more, or have you
I
covered that?
I don't really like it.
Okay,
How's that? Is that being honest?
that's a good answer.
Okay, cool. The next question is from, I don't even know who it's from. It says, hi Dale and Janine. Thank you, and the team. Thanks for Accelerate Your Wealth book. I have set up my trading plan and basic rules based on it, and so far I have a healthy profit from my portfolio. Well done. Now, one share I don't currently own but would love to know your opinion on is Reese, or REARE. H is the stock ticker code. Also notice there are 3 big weekly trading volume spikes 12 weeks apart. Good pickup. What do you think this is due to? It doesn't seem to have a significant impact on the share price. Thanks for your time, all your time and effort, Simon. So every 3 months, would you say that would be options expiry?
No,
What would you say it would be?
it's a secret.
Okay, you're not allowed to know, Simon, unless
Simon says,
you need to be part of the secret club of Janine.
I looked it up, Simon, just for you, because
you?
I thought how interesting and what a great question
That
to
would have
send
been my
in.
guess off the top of my head, though.
Have we looked at the charts, or are we just looking at my face at the moment? I think the chart's going to be more interesting for everyone. So if we just look at the spikes there, you can see that the 3 spikes he was talking about.
Yeah.
So here we've got on the 18th of September 2020,
Yeah.
we get another one on the 18th of December 2020,
Yeah.
and then we see one in March.
So are they some sort of corporate actions or something?
The first two, right, the first one was, see how the stock's risen in price? What happened? This is a quiz for you to see if you get it right. What happens when the share moves up a lot in price?
I asked Janine.
Potentially, it goes into the next index above.
Index. Oh, okay.
Right, so here it actually went into the ASX 300.
Okay, cool.
And then in December, it went into the 100. Now, what a fantastic achievement for a stock to go into the 100, because then more people are going to be looking at this share.
Looking at buying it, yep.
Okay, so that's what happened here. They kept on rising, and then we saw Australian Super increase their holding. Now, I don't know if the spike has got anything to do with that, but I was looking through, and there could be something else, because I was looking through Reese's website in the Investment Centre. This is a really good place for all investors to look. When you're interested in a company, to go and have a look at all the announcements that these companies have made on the ASX, go and have a look at their announcements on their website and what's happening. So that's where I found that information. Now, would you be buying this stock right now?
No.
Would you buy based on the fact that you saw Australian Super up there holding?
I reckon I'd look at it.
You'd look at it, but you
yeah.
wouldn't be necessarily buying just because they've gone and up their stake,
No.
would you?
No.
So, I mean, it did appreciate after the time that that Australian Super put them extra money into it. But Is it likely to be the end of the run potentially for now?
Look, I think it's going to run out of steam in the not too distant future. I can't keep going at this pace for too long because eventually all the institutions get their weightings.
Yep.
And that's really why I said no to buying in after Australian Super did, because they would have been getting their weightings in for their portfolios after it's gone into those new indices as it's gone up. So once the big end of town have got all that and they've settled that down, then it'll run out of steam a little bit more, and then it'll start to float down a little bit. So I would wait for a pullback before I got into that.
It's huge,
but I
isn't
think
it?
it's a phenomenal story. I think what you've talked about is great.
Yeah, I think great question, and thank you so much for bringing that one up.
It's a really good example of, people ask us this every now and again, don't they? So it's a really good example of that
why spikes happen.
Why spikes
Sometimes
happen.
it can be for different reasons. Yeah. Well, Dale, this has been a very big show. And we've covered a lot of ground, and really appreciate that we're getting these emails, these great email questions coming in, and not just ones with the viewers asking if they should buy or sell a stock. That's what I really like as well. I know you do too.
Now, yeah, I totally agree with us. It shows that they are really keen to understand, and it's really, really great to see that they do want to understand. Now, if you're somebody wanting to trade the stock market and really looking for a proven way to learn how, then the best thing that you can do is call that team of real traders who are happy to spend some time with on the phone, free of charge, no obligation, just to help you understand how you might achieve your own goals in the stock market. All you need to do is call 1300 858 272. It's pretty easy.
And we do hope you enjoyed tonight's show and get a lot of value from our answers to your questions. So now it's your turn to help us, and hit that subscribe button and say thank you to the team who put in such a big effort to bring you this show each and every week. Thank you very much.
Now also remember to put the show into your calendar to join us right here on the Australian Stock Market Show, live every Tuesday 7 to 8 p.m. Now if you'd like to have your question answered on the next show, then really you need to send an email into info@wealthwithin.com.au and type wealth within line in the subject line. So remember, email only. So you need to be doing that. Now remember, you also must do that before 3 p.m. on the day of the show to get in the show.
Now, as always, thank you for joining us, and we hope that you've had a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.
I think I'm going to have a snooze now after that big show.